Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be providing an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and remember to check out the sale for Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, as we've said before, when we are below the bull market support band, we are better off referring to it more or less as the bear market resistance band. And that's more or less what it's been since late November when we initially fell below the bull market support band and were unable to hold it as support. Now, since then, Bitcoin's price action has been best characterized by relatively short rallies followed by continuing declining price action. And so far, every attempt to break through the bull market support band is thwarted, right? We're unable to do so. Sometimes it seems like we're going to make it, and then we just go back down. And occasionally, we are able to get back above it, but we don't see any follow through on that move, right? You need to see follow through. Furthermore, in addition to not seeing follow through, we had really no real attempt to try to hold it as support here, and therefore, you can see how quickly the price deteriorated as people were losing confidence in the bull market. Now, again, I've said for a long time now that we have been in a bear market basically since late November of 2021. And realistically, you could argue that we've been in a bear market even a lot longer than that if you assume that this was sort of just a dead cat bounce that actually saw a new high. But I think when looking at this chart, we always need to figure out what is the line in the sand for us to get back above in order for us to feel somewhat bullish, right? What is the line in the sand? Not only to just get back above it, but hold it as support. And as of today, the 20-week SMA is now at 39.3K, and the 21-week EMA is at 40.1K. So it more or less ranges from 39 to 40K is our line in the sand. And it's funny because after 7 red weeks in a row, these things, they just seem so far away now. Like once upon a time it was only, Bitcoin only had to go up, $2,000 or $3,000 to get back up to the bull market support band. Now it would have to rally like $9,000 basically to get back above the bull market support band, which again would represent from these levels about a 27 to 30% move or so. Okay, so clearly going up to the bull market support band is a much loftier goal now that we've come down as quickly as we have. But it is something that we need to keep in our minds, as if we are able to go back up to those levels. Remember, it doesn't mean a thing if it doesn't have that sting, and if we can't get it back above it and hold it as support, it doesn't mean anything. Okay, so to sort of look over in general where we are right now. We're in a bear market, right? We're getting rejected by the bull market support band. We just had 7 red weeks in a row, which we've never had before, right? Bitcoin's never had 7 red weeks in a row. And the 20-week SMA is moving down relatively quickly, right? This is moving down at a much steeper angle of attack than it was back over here during the summer lull, because of how quickly the price has deteriorated, and we haven't really seen any type of bounces anytime recently. Now, one of the things that we followed is the similarities between this move and what happened in 2018, right? I mean, you guys are no stranger to this. We've been talking about this for a long time, and it's what I warned you guys about back in Q1. We followed this move relatively closely, right? The low, the higher low, the rejection off the 200-day, the failure to put in a sustained higher low followed by deterioration down to this level, and then we actually had a rally back up to the 200-day moving average a couple months later or so. And we've seen a very similar trend play out during the bear market, right? So this type of a move here, which, by the way, I saw a lot of people, calling for an alt season here and calling for a bounce back up, to these levels and whatnot. But listen, like once you get rejected by the 200-day at a bear market, and you're sort of just putting in these higher lows, you have to see the writing on the wall and say, look, guys, I know some people are promising you an alt season, but there really is no evidence to suggest that that this was going to lead to a bounce back up to the 50s or the 60s or anything like that, especially when you're seeing this rejection off of the 200-day moving average. So I would say do not get lulled into that false sense of security that there's an alt season around the corner just because someone told you to, when in fact you can see that the bear market is in full swing. Now, with that said, if this pattern were to play out, it would still mean that we could go back to the 200-day moving average, would it not? If we were to look at this chart and say, well, so far we had 1, 2, 3, 4, right? And then the lower low, 5. And the last one was the move back up to the 200-day, 6. And we've had a very similar move here, right? 1, 2, 3, 4, 5. And then the question is, you guys always make fun of how I write my fives. Then the question is, will number 6, are we going to go back up to the 200-day moving average? Well, the 200-day moving average now is at 45K. So, that's a pretty tall order for us to get back up to, but also do recognize that it is falling relatively quickly now that the price is moving down as quickly as it is. So, it is certainly a possibility, but we also have to constantly look at this thing in other ways, right? And say, well, look, it seems like when you look at it from this perspective alone, right? If you just look at it from this perspective, it seems like we're over here if we were to compare it to the 2018 bear market. And this is why I keep saying, let's hold off on calling for an imminent alt season, a sustained alt season. Again, no one's getting out of bed for 20% move just to give it back the next week, right? Let's do away with the idea that we're about to have a sustained alt season when we're basically just following the same patterns we've seen before. But you look at this and you say, well, this does seem like a very similar pattern. Therefore, it makes it seem like it's most similar to this phase. Does it not? It seems like it's similar to this phase. So then we could have that rally back up to the 200-day moving average. However, all these different indicators tell a different story. And another way to look at it is to go look at, say, the 100-week moving average and say, well, once we fall below it, the 100-week, we typically don't spend that much time before going to the 200-week. It could take another couple of months, but it doesn't generally take that much longer if history is any indication. And you can see we actually fell below the 100-week moving average over here. So then the question remains is, are we sort of in the phase where we go back to the 200-week moving average, which is all the way down at, I think I can see where it is right now, but it should still be less than 22K. It's 21,965. Are we in that phase now where we just go straight to it? Maybe we lollygag for a few weeks and then we just go straight to it. Or are we in the phase where we have to go back up to the 200-day and test that before we'll actually decide if we're going to go to the 200-week or not. So look, there's not necessarily a right or wrong answer. There's just different ways of looking at the market. I think it's probably somewhat responsible to be prepared for either scenario, but you can see where we are based on prior moves in these markets, right? If you just simply compare it to 2018 from the first rejection off the 200-day SMA, it kind of seems like we're over here. If you compare it to the drop below the 100-week, it sort of seems like we're over here. So there's certainly different ways that you can look at this market to try to identify where we are. To some degree, you should assume that no cycle is going to be the exact same thing, right? Every cycle is going to be somewhat different. This cycle, we saw, a double peak cycle, right? We had one peak and then a second peak. This one was a double peak cycle, but the second peak was much higher. This was a single peak cycle. So I don't think you can look at this and say that every single move is going to be identical, but to just recognize that crypto is in fact just a lot of if-then statements. The only thing I think that we should be able to agree on is in fact that we still sort of hold that bull market structure where all of our rallies are just sold off, and resistance levels remain resistance levels while support levels give way. Okay, so that's sort of what you see in a bear market, is that the support levels become memes, and like this would be one of the support levels, right? Drawing those higher lows, and ultimately that gives way. Once upon a time, you could have looked at something like this and said, okay, we're technically putting in higher lows, and then eventually that gave way. And then even over here, you could have argued we were sort of trying to trend higher here when we were closer to 47, 48K, and then ultimately that gave way. So the argument basically is that all of the support levels in a bear market eventually give way, right? They eventually concede to the bears, whereas the resistance levels tend to stay as resistance levels, and if we ever break through them, we don't typically hold it very long, right? Like the bull market support band, or like the 200-day moving average. Okay, we tend to hold them as resistance levels rather than actually give them a real fight. And you can see a fairly clear rejection off the 200-day. And this is what we warned about. We said before we went up to the 200-day that when you get these bounces off these higher lows, if we follow what 2018 did, we could easily see a rejection off the 200-day moving average before ultimately failing to put in a higher low, and we just deteriorate straight down, just like we did in 2018. So, I think it makes the most sense in this market to basically just say, you know what, we're in a bear market, right? It is what it is. We don't control what it is. We wish we did, but it is in fact a bear market. But to also recognize that the bear market is generally where it's a good time to be building in the asset class if you can, if you have any good ideas, to try to build those and make them come to fruition. But furthermore, you should also remember that bull markets can make you money, bear markets make you rich. Now, I think a lot of people, it's come to my attention over the last few months that I think a lot of people have misunderstood what that meant. One of the things that I see a lot of people doing over the last few months, going all the way back to to December and January, is that they say, well, bear markets make you rich. That means you're just supposed to DCA into altcoins throughout the entire bear market. But listen, in bear markets, altcoins can drop 90% pretty easily, right? Like, it's not even that surprising to see an altcoin drop 90%. I was buying altcoins at the bottom of the bear market, the accumulation phase. Some of them were down 99%. So, don't mistake the saying of bear markets make you rich as meaning you should just YOLO or bet the family farm on altcoins during a bear market, when in reality, the reason why bear markets can make you rich is because they tend to lead to an accumulation phase after it, which gives you plenty of time to DCA into the projects you would like to have for the next bull run. We don't typically go straight up after going through a bear market, right? And we can go back and see this type of thing play out, right? I mean, historically, when Bitcoin goes back down, we spend some time there, right? It's not like we just go straight back up. We spend a little bit of time there. Even over here, it was about 4 months or so, and then we still revisited it later for those people who missed out on it the first time. So the idea that Bitcoin just rallies back up to 100K in a couple of months, it's not a very likely scenario. I think it's more likely that after Bitcoin has really proven that the low is in, it would probably go sideways for a little while, at least a few months, right? So I think when I say that bear markets make you rich, as I've said before, they make you rich generally because they give you the ability to buy altcoins later. Without going through a proper bear market, you don't really see those cheap altcoin valuations, right? If you think about it, the people that were buying crypto in 2019 and 2020 were mostly the people that stuck around for the 2018 bear market. Like a lot of the people that were buying over here, experienced this phase. They lived through it. They were there every step of the way. And it was painful. Like, it was painful for them. And even I wasn't buying up here, but I did start to buy when I felt like we were getting down to this floor at 6K, and then the floor was ripped out and we went down another 50%. So remember, just remember when thinking about this, that the 30K level sort of seems somewhat similar to the 6K level back over here, right? There are some similarities here in terms of these levels. And we also, by the way, we mentioned that normally when you expect to get a market cycle bottom, you would expect a lot of volume, and for it to ultimately go below the structural support that it's held for a long time. And you can see that we've at least begun that descent, right? We've begun that descent here, and the weekly candle has in fact gone below the levels that we were previously holding, right? So we are now below those levels. And it's been pretty brutal for people. It's been a pretty brutal week as Bitcoin bottomed out locally at around $25,000. But I want people to remember yet again that it is this phase, right? It is this phase that we're talking about that leads to those cheap altcoin valuations, right? If you don't go through the bear market, right? If you don't go through this, then you don't get to the accumulation phase, right? If you don't go through the bear market, right, you don't get to the accumulation phase. So that's the point. The reason bear markets can make you rich is because they lead you typically to an accumulation phase where you have a lot of undervalued projects, that doesn't mean that YOLOing in on every dip during the bear market makes the most amount of sense. Okay. So, and I'm referring to altcoins. I mean, there's altcoins and there's Bitcoin. And I've told you guys many times that the Bitcoin dominance should be going a lot higher. And you can see that this last week was a pretty big move up. I mean, the Bitcoin dominance opened last week at 41.6%, and it closed the week at around 44.6%. So it went up, a lot. I mean, in terms of percentage, in terms of just a percentage move at 7.28%, but in terms of actually the Bitcoin dominance, it went up 3% in terms of the actual percentage. So a fairly big move, right? And we talked about this move, right? We said that alts are likely going to bleed against Bitcoin, whether Bitcoin goes up or down, right? Well, no matter what happens, it's likely going to bleed against Bitcoin. Bitcoin went down. What happened? Alts bled against Bitcoin. Bitcoin dominance went up. So I think you should recognize that this market is fully controlled by Bitcoin. Like, it's in control. It's taken back the driver's seat, or the steering wheel, I should say. It's sitting in the driver's seat, and it controls everything. If it goes up too quickly, alts bleed against Bitcoin. If it goes down too quickly, alts bleed against Bitcoin. If it goes sideways for a few months and just chops sideways, alts are likely going down against Bitcoin. So the point is that Bitcoin has now closed 7 red weeks in a row. The dominance is heading higher. We're still below the bull market support band. Therefore, we understand we're still in a bear market. We will try to find evidence of this turning around, and we'll put out some videos this week talking about that. But I just want people to sort of be aware of where we are. And also, one thing to remember is that last week's FUD price can quickly become this week's FOMO price. And it's just like this brutal process. Okay. So for instance, I bet you there's already some of you that are already feeling FOMO over a 31K Bitcoin. But just last week, we were, the lower bound last week was like 34K basically. So, if you had just talked to yourself a week ago and said, "Hey, you're gonna be feeling FOMO at a 31K Bitcoin," they would have looked at you weird. Your former self would have probably looked at you weird. But the same thing is true for every week, right? Every week has been continuing to go down. So remember in Bitcoin that it's very, it's a mental game. It's very emotional, and quickly what was last week's FUD can be this week's FOMO, and what's this week's FOMO could be next week's FUD. Okay, so try to just come up with a strategy and stick to it, and then ultimately you will in fact get through the bear market. We've always gotten through it before. It just takes us some time to do it, and then eventually we pull through and we make it out the other side. But in the meantime, remember, the strategy should remain the same, and you should just stick to it, and remember that Bitcoin is struggling to show real signs of strength. It doesn't mean it can't come back at any time, but even rallies don't necessarily mean anything unless we can get back above the bull market support band and hold it as support, and furthermore break the 200-day moving average, which is a pretty important indicator when Bitcoin is in fact in a bear market. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and remember, we do have a sale on Into the Cryptoverse Premium at intothecryptoverse.com. You'll get access to weekly reports and 3 weekly videos. You will get access to the website where we have all the on-chain charts, the ROI charts, logarithmic regression, social metrics, derivatives, NFT stuff, all that sort of stuff, right? You can check it out, lock in the low rate, keep it as long as you do not cancel. Thank you for tuning in, subscribe. I'll see you next time.